Are you trying to find a better option for your dream of starting a new home? Sometimes your credit score, income level, and living in a certain area may disqualify you from getting a mortgage. Did you know that it's possible for you to buy a house with little money without mortgage? It is surprisingly amazing that it is possible for you. We will walk you through how to legally and ethically buy a house. We will share with you the biggest trap to avoid so that you don't get messed up while you're trying to do this. Additionally, a sneaky little way to end up with a nice house. Let's make it happen. People want to become homeowners. Buying your own home is a big decision and a considerable financial commitment. But for you as a first-time buyer, and if your credit score is too low, it can be tricky to qualify for that mortgage from a traditional lender. There are a couple of options for getting a mortgage without you going to a bank. Some are federally backed, so they offer government-issued rates, as well as competitive low interest rates. Here are some alternatives to help more people accomplish their dream of home ownership. Consider acquiring a rent-to-own home. If you are getting started, renting to own may be the right decision if you are unable to qualify for a mortgage loan due to a low credit score, or want to save up so that you can buy items like furniture and appliances. With rent-to-own properties, your items will go through multiple people as they pass on before finally coming back into your possession. Rent-to-own homes are a type of lease with an option agreement. In addition, you are going to pay a deposit and monthly rent. You will also pay the owner a certain amount each month for the rental periods you need to own the home. Throughout this period, the owner will deduct money from your rent and apply it to the purchase price if you opt to buy when the lease agreement expires. Buying property later on in life is daunting for many people, who instead opt to rent. The main benefits of a rent-to-own agreement typically are that you can rebuild your credit score while still feeling like you're not flushing money away. Buying the property you want at any time throughout the lease period will make up a tidy sum to put towards the purchase value. Consider about subject to. The secret sauce for getting all of this done is a concept in real estate we call subject to. What is subject to? Subject to exactly means a clause in the contract that allows a buyer to purchase the property subject to its financing, meaning the buyer takes over the payments of the current mortgage loan. One of the advantages of purchasing a new property subject to can be beneficial. You don't have to waste time getting a mortgage approval or tying up your credit in something that will quickly be in another person's hands. It comes with many perks, such as the ability to look at the property again and use it yourself whenever you want. With the subject to the method of buying a house, you can buy a property with existing financing such as a mortgage in place. This is different from the traditional method of buying a home by putting no money down. It may seem too good to be true, but this is the only way that you can find an affordable home with no money or a job. This is possible with properties subject to that come at a discounted rate. These properties may seem like worth risking as you're in for life-changing moments. Just want to make sure you understand the steps involved and you know how it works from beginning to end. Try not to get overexcited about this money and mortgage concept. You can purchase your dream home without a down payment or with hard-to-qualify loans. It's just like buying a house but staying on the mortgage you're paying currently. You might have to leave a new note in your old house and list it as the co-owner of your dream home. But don't worry about that. The creditor is going to love this because the risk factors will be significantly low. Consider getting owner financing. If you're looking to buy a home and don't want to use a bank, financing your purchase with a seller who is willing can be an option. You can make regular monthly mortgage payments to the seller until there are no more payments left at year's end. You have to keep in mind that real estate purchase agreements should be created before the property is purchased. This document helps you facilitate the sale and set the payment details. In many cases, the seller will wait to transfer property ownership to you until a complete payment has been made. If you are finding a good seller who wants to enter into this type of arrangement is more challenging, but sellers who already have paid off their mortgage in full and don't need the proceeds immediately may be more willing. Consider buying property without putting any money down. What does it mean to buy rental property with no money down? A down payment is typically required for your mortgage loan when you buy rental properties. In this case, it could be tens of thousands of dollars just to get your foot in the door to owning your first rental property. Consider qualifying for a private loan. You may be able to get a mortgage if your credit score needs work, because private lenders will charge you a higher interest rate due to the risk of lending to you. But you have to keep in mind when dealing with an investment lender, they'll usually charge less, about 4 to 8%. And also take into account that they aren't taking such high risks as banks do. Another possibility is to borrow money from your family member or your friend. It can be awkward to ask your loved one for such a large sum, and you might worry as a result. But private loans are beneficial to both of you because it allows you lower interest rates. You will likely be able to negotiate more flexible payment terms and a lower interest rate with your family member than you would with a bank. But they might earn more interest off top of your loan than some other financial investments. Your family members can give you financial assistance without expecting anything in return. Make sure you document the terms of the loan, as well as how often and for how much it will be paid. Even if you have a close relationship with a lender, it's still important that you put everything in writing so that things remain clear for both parties involved. If the lender approves your application, they must draw up a mortgage agreement or a deed of trust, depending on your jurisdiction. That will put a lien on the property to secure the loan. The lien gives the lender the right to foreclose on the property if you don't pay back at least principal and payment. This can happen in 3 ways. If you sell or transfer title, stop making payments on the loan, or declare bankruptcy. Once you have repaid all borrowed money, the lien is removed by restoring your legal title. Observe to find these people. You might think about this question. Why would a person sell a property to you and leave the mortgage in place? Seems like you have come across a less scrupulous individual. Also, someone who is not looking to run from their mortgage, but also someone who has no idea what they're doing when it comes to buying a home. This definitely sounds risky for you, and most certainly, it's the kind of move that many buyers won't make for them. The answer is a very simple one. You need to find someone that is having financial distress. Financial distress opens people's minds. It is when the following events happen. If a person can no longer make their mortgage payments or is unemployed and has lost their income, he or she will be looking for a solution. The proceeds of trying to sell a foreclosed home that needs repairs and then fixing it up before trying to sell it just adds more time to a foreclosure process you might not want to go through. You don't want to go through unnecessary steps, so you need to avoid foreclosure at all costs. So if you encounter this kind of situation where there are in some type of financial distress, such as foreclosure, job relocation, divorce, bankruptcy, someone got sick, you can go on and on about all the ways that you've done subject tos. Although one technique is about people having issues with their mortgage. A mortgage is a big account, and being unable to keep up with the payments can spell disaster for your financial state. It's best to target those people with a mortgage issue. These people will be very open to you taking over their mortgage for them. If you know you can make a contract in which you specify how long you will have that mortgage, then you know your credit is improving, or maybe you need to take out fewer expensive payments. But your goal is to start making money on it. This is the perfect opportunity for the subject to. Millions of mortgages are in default currently in the United States. It's a great possibility for you to start marketing those people, and you get a property subject to where they're not going to require you to have money or a job. Acquiring money. You can buy the home you would like to without assuming a mortgage. You will not need to call the mortgage company because payments are passed due on your behalf. Therefore, money is not even an issue for you when it comes to your new property here. Well, you need to have some money to catch those mortgage payments up. We want you to know how you can get money and you don't need a job. In a situation with subject to, when you're not involving a bank, you can borrow the money. Essentially, you could have a line of credit. Also, you could have a credit card. You can have someone, your friend, your mom, your dad, whoever gives you the money in order to buy the home. As you're able to take over those payments and move into that home or turn it into a rental property, you will be okay. You don't want the person who is deeply in debt to get in over their head with more debt. You need to be connected to someone that's going to take over that property and that can handle that mortgage. It depends on what you want to do. But if you need the money to catch the mortgage payments up, targeting people that are behind on their mortgage payment is a super easy way to start getting property subject to. One way is you can send out some flyers or you can put out signs that say, "Behind on your mortgage payments, you can help." People will call you and you're going to need the money to catch that mortgage payment up and to be able to continue on the mortgage. That's really all you need to do. Consider paying in cash. You can avoid paying for mortgage payments on your home in the future and save money on loan costs. You might want to consider investing your money in a short-term investment rather than pay for your home in cash. This option presents simpler and more affordable payment options for you, which ultimately is the safest way for you to reach retirement saving goals. Remember that cash offers come with a wide variety of benefits for the seller, particularly if there is a bidding war and they want to make a quick sale. Cash offerings also mean there are no hoops you need to jump through to get approved. It's more efficient for you to save up your mortgage outright if you want to avoid potential financial troubles down the road. Unless you already have significant savings, it's important to establish an aggressive saving plan or consider one of the previous options. Using the traditional process. When you usually buy a home, you have to get into financing. You need to get your own mortgage. Qualifying for a mortgage can be difficult. It's tough to prove your income, assets, employment history, and credit so that you can make sure you can afford it. Qualifying is also time-consuming, which means finding the mortgage form you need as quickly as possible is ideal. With mortgage qualification, you want to make sure it's as comfortable and easy as possible for both you and your creditor. Everyone's risk tolerance is different. The same goes for you. It really does depend on your situation on the particular loan. If you don't have a job and aren't very wealthy enough, it's probably not going to be possible for you to purchase a home the traditional way unless you can come up with cash quickly, which isn't really a good idea. So if you have a situation where you don't have stellar credit or you don't have income that is stable and continuing, you are probably not going to be approved. On the other hand, if you don't want to go through the process of owning a home, you don't need to worry. This is because we give you all the details right now on what Subject to is and why you shouldn't be going through the traditional home buying process. Final thoughts. The process of applying for a mortgage can be stressful to you and time-consuming. You have to consider a number of different ways to finance your home purchase. Before you decide where to start, keep in mind that qualifying for a mortgage does come with its own challenges. That could deter you from bearing the brunt of saving up and waiting it out. We want to make sure that you have all the resources, all of the knowledge, and all of the tools that you need to be successful. The process of buying your own house requires attention to detail. Yes, it is very challenging, but definitely possible for you. Not only is it possible with the help of the right people, it takes the right amount of planning, preparation, and coordination with the people you trust and rely on. Don't forget to sign all of the paperwork required to complete the purchase, including your loan documents. That's it for this video, Real Talker. To your success! Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon.